Yo, 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 happy Wednesday, happy Wednesday. What is the date? May 1st, 2019. Let's go! Soul in a rope, but you treat it like soap. Like, hey, morning. What's up? G'day, mate. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term. Never risk money, cannot afford to lose. Hi, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you're brand new to these webinars, I'm here to make you a better trader. When you develop the skills and confidence to harness your destiny, you need to pay it back, man. If these webinars have helped you even in the smallest of ways, you need to pay it back. Go to TradersWay.com, open a fund account today. You can have an ECN account, variable spread account, fixed spread account. Just do it. Make your mom proud. Hey, I'll take your questions. If you want me to cover certain pairs, just let me know. If you want to have me cover a certain topic, just let me know. You're the boss. I'm just a humble currency trader. Make sure you like, comment, and treat your fellow Forex trader with respect. That's it. Those are the rules of engagement. Pretty easy, right? By the way, if you like my chart templates, like the ones you see behind me, or the ones you see in front of you, you can download them for free. It's in the video description below. And it says, I have watched some of your YouTube videos from 3 years ago. Very good ones. I've been uploading videos to YouTube before YouTube was officially even launched. So I think you can find videos on YouTube that I've done going back 11 years. So you'll find my videos on Forex.Today. You'll find my videos on Traders Way, their YouTube account, but you'll also find my videos on FX Bootcamp's channel. Make sure you watch them all. There's more than 4,000 videos, most of them an hour each. So get on it. Hey, I was there when I did it. So, right? Anyways, hey, good morning, Daniel. Morning, everybody. All right, so we got another dumb prediction today. And then we have the Fed meeting this afternoon. Do you guys want to get together for that? By the way, Adet, go to fxbootcamp.com. Do a deep dive into the knowledge, man. Don't call me a man. Okay, well. Yeah, okay. I can do that. I have to meet with my coach today, though. Yeah, I have a coach. Yeah, I have a coach. Yeah, nothing wrong with that. So I understand what I'm doing. I just need help. That's why you hire a coach, right? So I got X2 is equal equal I to the K expected 1 minus observed 1 over squared over E1. Okay, so I can do this math. I can do it. I can get the answers right. But I want coach. I want a coach to get better at it. So there's 3 different ways to do this. Similar but different, similar but the same. And I want to make sure I fully understand each one so that I just know it. So hard to coach. That's what you do. Yeah, like Tiger Woods. But in this case, I'm not doing Forex per se, but maybe I am. But look, I can waste another month or 2 figuring it out on my own, but I got final examinations, I have papers to write, I got things to do. So you might as well just get that knowledge, turn it on, input money, absorb knowledge, right? So anyways, I do it, you should do it. Ivan says, hey, Wayne, what trading do you recommend? Fixed spreads for trading, variable spreads? So if you're scalping, a fixed spread is better, especially if you're scalping news events. So like we have ADP coming out today. We have non-farm payrolls on Friday. We have the interest rate decision today from the Fed. We have the interest rate decision tomorrow from the Bank of England. These are all event-driven strategies if you're scalping them. So Ivan, do you use an event-driven strategy for scalping? AKA, do you trade the news? Your whole life, Barry. Your whole life. What do you do, Ivan? What kind of trading do you do? Hi, man. Yeah, it's Pharaoh. Why do you trade? Why do you change it, Pharaoh? I guess Barry's fine. 8 minutes and 24 seconds, Azabu. What have you been doing? Yeah. Ivan. Hi, man. Mr. T, Mr. Terrible, Ivan the Terrible. Would Ivan ask the question disappear? There you go. No, I prefer swing. Okay, then you want variable. Okay. So when you decide you want to start scalping, not just scalping, but event-driven strategies, then you'll want a fixed. Okay? Okay. I'm here for you, is what I mean. Cool. Okay, anyways. So anyways, Barry, I'm here, man. I'm here for you. That's all I'm saying. All right. USD Swiss franc. We have a downward move. Okay. How could we describe this? Let's look at it a little more closely. So where were we Monday? Okay. We were here. Okay, describe to me on Monday, was that a bullish opportunity or a bearish opportunity? By Monday, I mean Sunday afternoon, of course, when the market opened. No, that's not an old, well, on a smaller time frame, you could call that an old man, I guess. Yeah, you could. You could. That's not what I'm going for, but I see what you're saying now. Yeah, you could do that. But there's something much more important than an old man. It's very simple. Remember, the theme is I'm trying to get you to simplify your trading. Okay? There was no buying opportunity. Okay? None. Thank you for subscribing, guys. Appreciate it. Welcome to the family. So, on Thursday, on Friday, Sunday afternoon, there is no buying opportunity. There is no buying opportunity. It doesn't exist. So the only potential you have is down or don't trade. So what happened? Okay. That's what people are thinking. In fact, you can take it further than that. If you get like a perfect kind of move, right? The actual target is here, guys. Okay. Now, obviously, we got a lot of work to do. It's not easy to reverse an entire market, but that's what it says. Starting with here. It's actually starting with here. Let's do this. What do the blue circles represent? The blue circles represent bulls leaving the market. Okay? This stuff represents bears entering the market. So, if you don't use technical analysis or pivot points, you're a bull. You left pips on the table, quite a few pips, because you don't know what you're doing. Then, if you're a bear and you weren't there Sunday afternoon or London Open Monday morning, you didn't get paid because you didn't do your job, so nobody's crying. And that's that. It's all happened. What's next now? Bulls might come back. I'm not saying they will, but I'm saying if they do, this is the right price. Okay. We don't know, though, because we have ADP today. We have Fed today. We have Bank of England tomorrow morning. We have NFP on Friday, and we have ISM on Friday. These are just the things I think are most important, and there's more than that. So between now and the end of the week, we really don't know what's happening, right? So you might as well do what you want to do. Be a bull or a bear. And then manage the risk appropriately, right? Mohammed, there's no need to forecast. What you need to know is the trend. So ISM is probably about on trend. What's the Fed going to do? Probably not raise interest rates, but we already know this stuff. So do I care if ISM's a little hot? Do I care if ADP is a little hot or a little cold? No, actually, I don't really. Now, there might be an opportunity, but you got to remember, I'm old school, okay? I'm old school. Here's what used to happen when ISM came out unexpected. Okay? 300 pips from here to here. That's how I was introduced to Forex. So I scalped a lot. Okay? Now ISM will come out. Let's say it's way different than expected. It's going to go. Right? So I went, as I matured and as the market matured, I became more of a trend trader. Okay? And once you get that together, and once you learn how to trade and swing and stuff like that, and once you start to understand fundamentals and all that, I want to teach you how to build portfolios, and you'll see that there's something even more important than that. On top of all of that, right? What if you could guarantee you make, I think I asked you this the other day and I didn't finish the thought. and I'm not going to finish the thought today, but I just want you to think about it. What if you were guaranteed to get 200% on your money? Okay, let me just kind of whet your appetite a little bit. What if you were guaranteed to get 200% a year on your money? Year after year after year after year after year, year after year after year. With the pips, you're a pip hunter right now, right? You're a pip hunter, right? This is all that you're focused on. But what if I said, don't worry about the pips. If I could show you that no matter what, you're going to make 200%, would you be able to remove the pips from your brain? Could you be just focused on being a yield hog? Hey, you have to get the book, Greg. Okay? Huda says, definitely. Because what I've been trying to tell you is the secret to success is really assets under management, right? So how do you get assets under management? How do you get someone to invest into you? What if you could show someone every year for the last 5 years, regardless of before Trump, after Trump, during Trump, all this kind of Trump, all the different sort of markets and how the markets have changed over the course of 5 years. But what if you showed you made at least 200% a year? Okay. Would you be able to raise money? Would you be able to take your assets under management and increase them by a factor of 10 or a factor of 100? Because what is this? What do opportunities yield now? In the stock market, which has a lot of risk, you might make 20%, although historically it's like 5%, right? Bonds are zero, so forget that. Real estate pays, what's a cap rate on something, 6%, right? So like 200% is redonkulous, right? That's all I'm saying is at some point, the way you trade may actually change. Yield. How do you do it? You already actually get it. You already actually get it. Let me see if I can explain it. How about we do this one? What am I on? USD Swiss franc? Okay, let's take a look. I'm going to get that out of the way. USD Swiss franc right at the top. Nice. Okay, let me show you. What does this say here? Can anyone see that? It's 3.5, isn't it? 3.36. That's what you're earning. So if you have 100 to 1 leverage, some of you probably have more than that, but whatever. Let's say you have 100 to 101 to leverage. You're going to make 300% a year on your money if you're long USD Swiss franc. If you're in the United States, you only have 50 to 1. I'm sorry, you're only going to be making 150% a year. I'm sorry. Yeah, I'm sorry. That's I know that sucks. Only 150%. Okay? But what does that mean? You buy a mini lot for $100, right? And you earn $1 a day. It's probably even less, 89 cents a day. And you're laughing because in your normal trading, you're doing your normal trading and you make money, you lose money, you make money, you lose money. And you're like, oh man, I made 35 bucks, I lost 25, I made 40. I mean, you're doing big money, right? You're doing the big money. You're making 25 here. Why you laugh at 89 cents? You don't even see it. You don't look at it, you don't care about it, you ignore it. For you, it doesn't exist. But what if you held the trade for 1 year? You'll collect 300 and, well, I'll say 365. It was $1, right? And you've invested $100. Okay. Now you have $365 in interest because it's a $10,000 investment. You ponied up $100 and earned 365. But right now you ignore that. Huh, that's interesting though, right? What if you were the other way? What if you got into good trades and ignored the pips? And then at the end of the year, you found out you made $365 in interest payments. It's already in your bank account. But you're also up $1,350 in pips. You're like, oh, damn, that's nice. Okay? But what if you treated your Forex like a real estate investment where you just collect rent? And you're like, yeah, I know the appreciation of my value, the value has appreciated for my asset, right? South Africa is 1,001. Yeah, but you'll find out that you're going to pay for that leverage by not earning interest. Okay. Mike says, what if your pips go against you? Well, you have to manage your risk, bro. Okay, so look, you go like this and your stop's here, and every day you're collecting interest, and every day you're collecting interest, and Wednesdays you collect $3, and everything's going on, and everything's going great, and then it does this. Well, you sold your asset, you're out. But for, let's say, this 7 months, you were getting paid 300% annual for 7 months. And you got zero at the end of the year. The other way though, Mike, is what if it goes different? What if the story is like up, down, up, down, up, and then September hits and it goes and you're up here. Okay? What you should do is then you look at this and say, I need to move my stop up 300 pips. So you move your stop to here. And in this new year, because you know it's probably going to come down and then take off again, lock in next year's 300%. And now you're like, I've already guaranteed myself 300% in interest payments and 300% in appreciation. So my worst year is 600%. Okay? But you're like, but Wayne, that's only one trade. Build it. Build a portfolio, bro. Oh, but I have to have strategy for that, Wayne. I'm going to have to understand fundamentals for that, Wayne. And to raise money, I'm going to have to learn how to speak to a billionaire or millionaire and explain all of this to them in a way that they understand. Yeah, you're right. It's too difficult. Barry says in Europe, there's only 30 to 1. Yeah, that's terrible, huh? That's terrible. You're right. You're only going to make 90% a year in interest payments. That's so sad. Right? But what I showed you is what Trader's Way pays. So if you like that, get a Trader's Way account. can I say? Look, I'll do it again. You go right here, it shows you. Boom. There you go. 3 1/3. Boom. Why? Switzerland pays you to borrow money. Switzerland will pay you money to lend you money. How would you like to borrow money from a bank to buy your house? They say, okay, hey Barry, here's $1 million. And by the way, every month we'll send you $300. Compliments of the firm. Thank you for doing business with us. I'd sign up for that. Yeah, Barry, and nor did I say that, Barry. But here's the thing, guys. You enter a small trade, move your stop. Enter a small trade, move, and then move the stop. Enter another small trade, move the stop. Enter another small trade. Small trades, guys. Okay, so why don't you do something like this and say, let's say you put, let's say your goal is to have 100 open trades. Has anyone here ever had 100 trades open at the same time? So what I'm saying, Barry, is you should take the leverage, but you don't have to use it. Yeah, Brooke has. Yeah, that's cool. Not even 25. Yes, you collect swap in your account. Yes. Okay. Now, here's the thing. How much available margin should you have if you have many trades open? You should have nearly 100%. So I've had more than 100 trades open, right? And 98% of my available margin, which means essentially 98% of the trades were profitable. Okay. So it doesn't matter, sort of, Joe says with a 2%, it doesn't really matter. So let's say you do your 2%, right, Joe? So you enter a trade with 2%. Now, I'm not recommending that, but this is Joe's 2%, right, Joe? So you enter a trade, whatever it is, let's say it's 3 mini lots, or 30-minute mini lots, or 1 mini lot. It doesn't matter. It's all regards to how much you have in your account. But let's say that 1 mini is worth 2%. It's a small account. Or let's say it's 10 minis, so it's 1 standard, and that's 2%. But what I'm recommending is you get a good trade going, let's say in the first 2 hours of trading, and it goes up, you're up a certain amount of pips, move your stop to break even, go find another trade. Do it again. And at the end of the day, you got to find another one. Okay, get in. Once it's profitable enough to move your stop to remove reduce risk, move your stop again to remove risk, and then walk away. So I don't typically do that this time of year, but later in like July and August, I will do stuff like this, guys. And the goal is keep entering trades over and over and over again, and I'm not thinking about pips at all. So if you get, let's say you do 5 trades a day is a typical day. Okay. Sometimes, some parts of the year, I will take profit on all 5 trades. In other times of the year, I will try to simply move the stop to break even and never get out. Well, I don't get out based on price. I get out on time. So I'll have to teach you that later. Okay. Okay. Yeah. Okay, Barry. So the thing is, guys, and maybe you're not ready for it, and that's okay. That's cool. I'll teach you. I've taught it in the past. I've been doing this a long time. A lot of people have learned a lot of things. You might be here for the first time. I don't really know. But there's a whole world out there you don't even know about. Okay? You're not even considering it. Okay? Look at this. Let's say you entered a trade here, and another one here, and another one here, and another one here, and another one here. You see how long you could have been in these trades? Collecting interest. So, right? And you might have gotten knocked out here. Typically what I would do is move my stop to here, and then it keeps going, and then this low would take me out. Okay? So you'd collect pips. So you collect all these pips on all of your trades plus interest over this period. And that's a professional career. Okay, guys? Brooke says the thing to remember is stocks do poorly ahead of the Fed. Not unless people expect the Fed not to do anything, and then it does well. Okay. So yeah, so Huda says I feel like I'm missing a lot. So where do you start, guys? And then we'll jump into the technical analysis. Where do you start? You have to learn technical analysis. Okay? But then a lot of you guys get caught in you start trading, money you can't afford to lose, and you suck because you just started to learn, and then you start losing money because you suck. So then you find a guy on YouTube that says he drives a yellow Lamborghini because he scalps, and you're like, that makes sense because all my losses are small. I can't lose as much money as I have been losing because I get in and out of the trades quickly. And that seems to make a lot of sense because you've been losing a lot of money. So now you're like, that makes sense. And you instantly buy into this idea of poverty. If you trade to drive a yellow Lamborghini and you limit your upside potential, right? Think of it. You're trying to make small amounts of money. You're trying to make 20 pips. Ha! You're poor, and you're going to stay poor. And you don't believe me now, and maybe I just insulted you. How dare you? Dude, whatever. Okay? If you're trying to be small, you're going to end up being small, if you're lucky. Most likely end up broke. But anyways, so you start with technical analysis because you have to know it. Don't get sidetracked. Learn it as a skill. That's all it is learning price and time. Price action, support and resistance. That's all it is, so that when you have a strategy, but remember, you don't know how to create a strategy at this point. You're learning technical analysis. But if you had a strategy, you'd be able to say, I want to buy at this support. Or if you were a bear, you'd say, I want to sell at this resistance. Okay? Then you do fundies, right? Then you do strategies. And then you need to learn how to trade like a professional and not like some punk trying to get a quick yellow Lambo. Okay? Pro, not punk. Okay? So in here, you're not learning these things, but nor are you ready. You don't even know they exist, right? So don't get sidetracked. Just remind yourself you're simply learning technical analysis. Humble yourself. I told you the other day, right? My gardener asked me if I was a Forex trader. And he said, what should I do? And I'm like, look, if that's something you're interested, you should spend a lot of time doing research. You should spend a lot of time doing education. Go to Amazon, see if you can find any books, read all the best new ones. He's like, do you know a particular book? I'm like, no, I don't know a particular book. I didn't tell him. He's like, where do I go for training? I'm like, I don't know. Do some research. And he's like, so what's your advice? I said, let's say you wanted to be a mixed martial arts fighter. Do you want to go into the ring today? What do you think's going to happen? You're going to get your ass whooped, beaten to a pulp. I said, that's what Forex is like. So why don't you train for a few years? It's kind of like, why don't you learn jiu-jitsu first? You know what I mean? That's what I told this guy. I said, spend the next 3 years learning Forex at night while you're doing my garden during the day. So anyways, true story. So right now you're just learning how to not get beat. So don't start thinking because you know how to trade a 5-8 cross that you're going to be a big boy. That's just the beginning. Okay? It's just the beginning. You're in the long game. You're in the smart money. Well, I give him a lot of credit to come up to me, though. And he tried to use all his good, his white boy trailer trash manners. Excuse me, sir. He was very humble and all that kind of stuff. He approached me like, you're not supposed to talk to the client. Don't talk to the homeowner. Don't look at the homeowner. Don't, like, right? Can you imagine the owner of the company if he was there? Because usually the owner's around. The owner would have just, oh my God, you do not, right? You do not even make eye contact with the homeowner. So anyway, so he was nice. He did his best. So I gave him good advice. So anyways, whatever. All right. Cheeky gardener. Well, he earned it, right? Good for him. He saw the opportunity and grasped it. I'm being a dick. Well, you know what? I didn't mean to be a dick. I'll even post that. What my point was, is we all need to humble ourselves. What most people do is they learn technical analysis and then they go for it because they think they got it. And their goal is to make a lot of money. But you're about 5 steps away from learning how the people that actually make lots and lots and lots of money, they do it differently than what most people here have been doing. Okay? That's what I'm trying to get to. So I'm not trying to be a dick, although I definitely can be. Also, you can misunderstand what I'm saying, especially if I'm babbling or something. Hey guys, I every time I have my marker, I can't, but anyways. All right, so let's say lots of people think of being a dick that way. I'm trying to be, right? I'm trying to be, but maybe I missed it. Maybe I missed the mark. So if I cross the line, I do apologize. I don't mean to be a dick, but it's true. There's more to it than technical analysis. Okay? You see what I mean? Does that make sense? All right, so let's go. Yeah, yeah, and so it's going to rub some people the wrong way. But it'll be clear to others, and then I'll say something differently in a different way. Okay. Okay. So again, I apologize, but maybe you heard me, which is a very good thing on the long run if you can hear me. If you can hear the message. The message is you need to take this serious. There's a lot more going on than just basic technical analysis. You're not going to be able to scalp your way into changing your life. There's not a quick move here. Oh, was it? And I said trailer. I said trailer. I said trailer. But dude, what do you think? I was born with a silver spoon in my mouth? You think I was born rich so that? Okay. Then that you're focused on the wrong thing, guys. All right. So anyways, what I was saying is that's somebody's plan. It may not be the right plan. We don't know. So the next thing is, what is your plan, right? So there is something in here. Right there, huh? Yeah, Mike had a Starbucks plastic spoon. Yeah. Yeah. I didn't grow up in a trailer, that's for sure. But I lived in a house with no running water in the kitchen. So I've earned it. I'm not afraid of it. If you ever were like an 8-year-old child who would have to walk to the bathtub in the bathroom to fill a bucket of water so your mom can do dishes, yeah. So I got it, dude. All right. Let's do this. There we go. Let's go back to this. We were talking about this a long time. Range bound, range bound, range bound. What's likely to happen in a range bound market? It's likely to stay range bound. No, hey guys, don't jump all over Roger. Roger's cool. I'm cool with Roger. I don't know what he's saying, but no, Roger's cool. So hopefully Roger's still here. Thank you guys for having my back. But no, Roger's right. I crossed the line. That was inappropriate, and I did cross the line. I did apologize. I was a dick. I did apologize. Roger's cool. He called it like it was. Okay. But the point is, if I can't strike an emotion with somebody, then usually the lesson, right? The lesson is lost. So sometimes I have to, we have fun and we're singing and dancing. And sometimes I'm really hitting home like, you're not working hard enough. And then there's other things where I inspire you that you can do this and this is going to be great. And then, but sometimes also anger or some other thing. It's another emotion in which we can plug something in. All right. So like the gardener, he's clearly old enough to go to college or older than college. Okay. He's blowing leaves for a living. Okay? He's in a country where nobody's holding him down, nobody's holding him back. He's got no excuses, right? He can be as educated and as successful as he possibly wants to be. So when he says, hey man, I want to be a Forex trader just like you, what should I do? Educate yourself. Work, right? Read lots of books. Get lots of training. Don't risk real money in the market until you have real skills. Read, nights and weekends. These are all the things I said to him. 99% chance he ain't going to do it. But it's the same thing on YouTube, right? 99% chance that nobody's going to do it. But there's the 1% are going to do it, and they're going to kick butt. So I got to be like frank and honest, right? Cool. Roger, yeah. All right, okay, we've beaten this to death. Can we all just have a group hug? Come on, bring it in. Come on, bring it in. Come on, here we go. Come on, bring it in, Papa. Come on. It's okay. I'm okay. I'm sorry, man. Right? Yeah. We're good. Yep. All right. Yeah, a couple more yen pairs. Wait, these aren't even all yens. These are scattered. Well, let me do gold and oil first. Yeah. And by the way, someone said, they don't want to be a professional trader. They're just like something about saving money for college or in college or something. Hey, great. Be a swing trader. Don't be a scalper. Okay? Listen to me. Be a swing trader. Don't be a scalper. Scalpers work hard. They don't have much time because they get paid by the minute. And sometimes you have to sit around for 30 or 40 minutes waiting for the trade. Then you got to nurse it for 3 or 4 minutes. 3 or 4 minutes, 30 or 40 minutes, and then you get out of that trade. Then you got 30 or 40. I mean, literally, it's a full-time job, and you might make, 10 trades a day? 20 trades a day? Probably not 20, probably 10. And you end up working the full 8 hours. So you're like, I'm a college kid. I'm just trying to make money scalping. Like, that's a full-time job. You're not going to do that. But I could spend 5 minutes a week swing trading and make probably significantly more money than the scalper. So that's my advice in that sense, okay? Is that right? You guys are having trouble with resolution? I thought it was streaming at full. All right, cool. So what do you want to do with gold? Was this the one we did Monday? I asked you if you were a bull or a bear. No, I don't think it was it? No. Well, I guess we could, I think some of you guys said bears, right? Was this Monday or something? I don't know. But let's just pretend we're bears on this. You sell here. You sell here. Actually, sorry, here. And then you sell here. Okay, let's go to strategy, though. It's probably where we did that first. Oh, sorry. Sorry, you're like, why do I have to look at this dude? Yeah. Why'd I have to look at this dude? Yeah, there's lots of video there. Well, first of all the videos on the Forex.Today YouTube channel are me helping you learn how to trade. But I can only sort of like give you glimpses of the general, like, this is generally how you trade. This is generally how you're supposed to be focused. But I think there's 750 videos now on the Forex.Today channel. There's probably another 300 or 400 on the Trader's Way channel. And then there's 4,000 on my FX Bootcamp channel. There's a couple of playlists that are like free training videos that are more do this, do this, do this, do this, do this. Very mechanical education, but not real market. Well, it's sort of a mix, but I did them 14 years ago or something. So anyways, they're there. And then, of course, if you want hand-holding, hardcore training, that's FX Bootcamp. Okay, guys, I'll look into that. I thought I was streaming it full. Okay. Right on, guys. All right, so strategically, what do you want to be here? It's the 1st of May. By the way, I've already planned out the entire month of May with the swing trading group. Days ago. In fact, it was last week. We already planned all of May. I know, right? Faux show. Right? Some people are trying to figure out what to do today. Oh, we already planned out the whole entire month last week. Right? Again, just showing the example of what you should be doing. Now, this is difficult. You're not going to get any answer here. Okay? Okay? You see that? So you're going to have a bigger strategy. How are you going to play this? Like this? Try to connect all that? That's cool. So if you're a bear, this is plan A, this is plan B. See? That's why strategy is important. If you're a bear, done. Easy. Okay? You see that? Should I be a bull now? Well, there are bulls in this market, and on a shorter time frame, there is an opportunity. But maybe you're better off waiting if you're a bull. But I think you can see by this chart that Monday you could have been a bear, Tuesday you could have been a bear, today you could have been a bear. Maybe tomorrow you could be a bear, we don't know. But going into a chart like this, think about what an amateur does. They open a chart like this. In fact, they're probably even closer than that. They look at a chart like this and they're making decisions. Oh, I'm showing my charts. Oh, yeah. I am showing my charts, guys. Okay. In fact, that's probably even too close because their charts probably look like I was on gold, right? They're probably looking at it like this. Am I right? That's how they're looking at gold. And they're making decisions. So if you were even a smaller time trader, I would I would say, yeah, in that case, you could scalp this as a higher low, higher high scenario, and you can pick up a couple of pennies, and things will be great. But that's not the money. Okay, you're not going to make the money. It's like your potential is maybe double the spread. Like, dude, right? Okay. So I'm trying to get you to see the bigger picture and have the bigger plan. Cool. So anyways, we'll get there. We'll get you there. So we had oil, right? Up, 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 down, down, buy, 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 up, 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 down, 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 down. So there's two scenarios here. Full on reversal, down, 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 up, up, sell. How many people want to do that? Well, Forex Pipper, going back to gold, says, look at a weekly chart and you'll know it'll probably go down. Well, first of all, I don't look at weekly charts. In that case, I would want fundamentals. So people are looking for yield. They're not looking for gold. Okay? People don't want to hold the physical gold. Why? Are they worried about inflation? No, there is no inflation. You can't even create inflation. Do you know how many central banks? Right? We have the Fed worried about inflation, but it ain't there. They're worried about a ghost. And then you have every other OECD country. They're trying their best to create inflation. They've been trying for almost 10 years and they can't do it no matter how much money they print. They can't create it. Why would you want to own gold? Well, there's normal industrial demands and stuff like that, but there's no real reason to own it. And the people that I know that are serious gold people, they actually own the physical gold. They have a vault. They have a ton. They have hundreds and hundreds and hundreds of millions of dollars in gold sitting in a vault, and it probably costs them $3 million a year in security costs. They lose money. So you wouldn't want to own physical gold. You don't want to own gold futures. It doesn't pay you anything. But the dollar, like I just showed you, why would you want to put gold in your Swiss bank account and earn zero, actually lose money, because Switzerland's going to charge you, and there's a carrying cost for your physical gold. You're going to lose 3% a year. Or you can buy the USD Swiss franc with no leverage. Remember that one? Oops, I forgot the age. Right? You long this thing and earn 3.36% a year, not lose 3.36 a year. So why would you want to own gold is what I'm saying, right? And by the way, with 10 to 1 leverage, you're earning 30%. Actually, 33%, 33.3. Let me ask you this again. How many people think they could start a fund and raise money if they could prove to people they will earn 33.3% a year? Is that good enough? 10 to 1 leverage? Okay. Well, I'm just opening your eyes, guys. I'm just opening your eyes. So how about in that situation with, instead of, if USD Swiss franc, what if you long that every day every day. Every day, every time it went up, down, 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 you buy it. Up, down, 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 you buy it. And you buy it. And you buy it. And you buy it. You would end up having a ginormous portfolio of USD Swiss franc. And every time you invested money, so you might only be investing one trade at a time, obviously, right? But every time you put money in the market, that amount that you've put in will earn 33% if you're 100%. If that's 10 to 1, guys, with 10 to 1 leverage, every one of you is leveraged more than that. But think of it that way. Every time you were able to put money in, that money you invested will earn 33. Or if you're 100 to 1, 333. So do it again, and 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 again. You do it 500 times a year, you buy that. Now, lots of them are going to break out, a break even. Doesn't matter. When you deploy the money on an annual rate, that's what you earn. So why wouldn't you go ape crazy trying to catch that? You should be just redonkulous trying to catch that. But right, so like it's so funny. Like it's such a basic idea, and we all understand it, right? We all understand it, but you've never thought about it. Would you lend me money if I said I'd pay you 333% interest per year? You're like, yeah, I'd lend you money. I'm like, yeah, but I only want it for 3 months. You're still going to earn 333% annually for the time period that you hold it. Okay. Now the interesting thing is, if you do it right, you're going to make 100 times more on pips. Right? If things go well, you'll probably earn 3,000% on your money, not 300. But again, my point is you probably have never thought about it that way. Well, how would you trade if you had 3 billion? You'd be scalping? Which one's more likely to lose money? 20 times a day you're trying to make decisions on buying and selling and buying, selling, buying, selling, buy, sell, buy, sell, buy. Or every day you're like, I'm buying a little more USD Swiss franc if we get a pullback. If I find support on USD Swiss franc, I'm buying it. Then I move my stop to break even. And I might do that 1 or 2 or 3 times a day. 2 of them are going to break even, but 1 will stick. And by the end of the year, I will have over 300 open trades, earning 333% on the money, plus pips. See, I think you've been thinking all pips and no yield, and later on you think pips plus yield. But I think if you were a billionaire or manage $1 billion portfolio, you'd be thinking the yield plus pips, not the pips plus yield. Because one is guaranteed and low risk, low volatility, and has a consistent story, and the other one's exciting. Yeah, right, Michael? Like, dude, 33 is pretty good. But Mike. So you can tell your potential client, you can say, most traders in the United States are leveraged at 50 to 1 in the foreign exchange market. I, sir or madam, I am risk averse. I only leverage 10 to 1. This gives me, my portfolio earns my portfolio earns a yield of 33.3% a year on money deployed. Now, of course, you might only have 10% of the money deployed because you haven't built out your portfolio yet, but that is true. On the money deployed at 10 to 1, low risk, you're earning 33% per year on the money deployed plus asset appreciation. Okay? This creates low volatility, high yield, moderate risk, I don't know. Does that sound good so far? Think big, guys. Think big. All right. Some of you are like, just tell me what to do, Wayne. All right. That's a bearish move. Okay. This was a bullish move. Both of these trades should have been done Monday or Tuesday. Okay. Let me click in so you can see. Okay. If you were a bull, this is where the market opened. You should have bought it. That's clear as day. If you were a bear, yesterday we had this, you should have sold it. That is clear as day. Slap in the face, kick in the shin. Like if someone kicked you in the shin, would you notice? That's what these are. Okay. And now you're like, what should I do, Wayne? I have no idea. If you didn't sell that and you didn't buy that, I don't know. I don't think you know what you're doing. There's not much I can do here. And then we got event risk twice today. ADP, oh, I missed ADP, huh? Hey, did ADP come out? Did it come out hot? Did we get a number? It is Wednesday, right? Yeah, I think it is Wednesday. Right. Okay. And then we have an event risk tomorrow. We have an event risk, 2 event risks on Friday. Like, so that's what I'm trying to get to you. And again, maybe I sound like a dick, but I have to tell you as clearly as possible. If you were a bull, my God, you had to be there when the market opened at the beginning of the week, and you were right on the exact price. And now you might lose money, just like I said on that USD Swiss franc scenario, right? Where you're just buying and buying and buying and buying and more buying and more buying as long as you're at support. I said you're going to break even a lot. So let's say you're a bull on oil and that's all you do. Well, you bought it here. That was a perfect entry. That's exactly what you should do. That's the exact price right at the market open. Everything is absolutely possibly good. You couldn't have done it better, and you'll probably break even. That's exactly how you're supposed to trade, by the way. The result is not something you can control. Your job, if you're a bull, is to enter there. If you don't know what that means, like you're like, Wayne, I'm looking at it, but I don't see it. I don't understand. You need to take training at FX Bootcamp. That, I don't know. Once again, straight up, that's what you need. Okay. If you're a bear, same thing. That's clear as a bell. You should have been there, waiting and wait. You should have been hiding, ambush, everything. You should have been there hours and hours ahead of time, ready to just crush this. But if you're opening your charts looking for trades, dude, it ain't going to work. You've lost. You've already lost. Okay? What you should have been doing as a bear, when we were down here, you should have had this just nailed down tight. Okay? Right? Nailed down tight. You got that? That's how you make your money, guys. You sold it yesterday. Yeah, that's what you were supposed to do, right? So it's like, Wayne, what do I do now? File for bankruptcy. Yeah, I mean, you're missing the whole thing, the whole kit and caboodle. So now I guess what should I say? Well, if you don't have a trade plan that you're following, if you have no strategy, Wayne, I don't want a strategy. I don't like strategy. I don't like planning, but Wayne, tell me what to do today. Okay. Let me do that for you. All right. So you were a bear, but you didn't sell it here. What should you have done? You should have sold it here. I don't have a more basic plan than that. Okay. By the way, like seriously, and I might be pissing you off, but I'm not, and hurting your feelings, but I'm right. And that probably pisses you off even more. You know I'm right. If you're missing all of this stuff, like if you just don't get this, like wait, I still don't get what you're saying. You're lacking training and you can fix that. Okay? But if you're lacking just the planning, like this should be clear to you that that's a buy. I mean, oh my God. I'm looking at it again, even on a daily, like, oh my God, that is so obviously, if you're a bull, that is so ridiculously obviously your buy. Okay? So if you don't see it, all you need is some training. You're like probably 5 days away from just mastering this, right? And like, this is clearly on a daily level where bulls are going to get out, but on a weekly basis, this is clearly where bears are getting in. There's a confluence that says down here, right? So what do we do now? So like on Monday, you could have bought here. Tuesday, you would have bought here. Here, you would have taken profit on both your trades. And now this bearish engulfing candle sets up a retracement move like this, okay? But if you're a bear here, you might try again in here. And tomorrow you do it here. So the plan would be something like this, right? We don't know if any of that's going to work, but that's what the planning's all about. So that if it does work, you know where your risk is, you know where your reward is. There's no more trading blind. When you know how to trade, guys, you always know where your risk is. You'll always know where your reward is. No, you don't wait for a 5A cross on a 4 hour. Okay? So for example, I guess for today, right? Let me clear this out. And I have to shut this. Okay. This is clearly a down move, right? Okay. So where do you want to take this? Okay. I'm trying to get my drawing thing. Okay. Down, 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 down. How do you trade a move like this? You fib it. Done. Okay. Second thing is on a daily trade, and after a bearish engulfing candle, off of a weekly pivot point, off of a weekly bearish pivot point, off of a daily bullish profit zone, all of this should make tons of sense to you, okay? And by the way, I'm trying to inspire you. I'm not trying to piss on your shoes. I'm trying to inspire you. All of this is very clear information, okay? So starting the day, which is here, you should say, I want to get short in this area, but you're already there. If you didn't trade Asia, because it's too difficult, it's in the middle of the night, whatever, then you have London open. Okay? How long ago was London open? 6 hours ago. So 6 hours ago, you're kind of in this friend zone here, and you're waiting for your rollover. Okay? And so here's what your plan was. Okay? Got it? The man of many talents. Yeah, right on. La, 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 la. looking for something, but I can't remember the name of it. That ain't gonna work out. Yeah, I can't find what I was looking for. It's too bad. We'll have to come back to that. It's pretty late. Let's do one more. Yeah, of course. Absolutely, Joe. You're just, in this case, selling everything versus the dollar and picking up a yield. Hey, it's just, yeah, sure. The whole point of Greenback Guru is that to learn fundamental analysis, you should specialize in focusing on one currency. I used to be asked all the time, if I only traded one currency pair, what should I do? I would never recommend you only trade one currency pair. I recommend you only trade one currency. I wonder where that, I'm looking for something. I don't remember where it is. I want to save it. Maybe I have it. No, maybe I have it. Scan market. No. Is it here? No. No. Anyways, Eileen, is it possible that our broker doesn't blend the price for your price? Overnight? That wouldn't be a problem. Unless you got some crazy pair, but no. I mean, anything could happen, but over weekends is different. Over holidays is different. But generally speaking, no. Maybe, where is this stuff? I'm missing, I want to find a template. I just don't know where it is. Maybe it's this one. I think it's this one. Yeah. Okay. Anyways, yeah, I did that on Monday. Voodoo. Yeah, the pound is so reliant on Brexit stuff that it bugs me. It doesn't mean it's untradeable, it just bugs me. So just quickly, guys, I know a lot of you have put in requests, but there's been a lot of chat. Can we just do it one more time? What currency pair would you like me to cover? And I'll do that right now. Euro dollar. Okay. Jorge's pissy. Euro dollar. Oops. View. I didn't mean to delete your message, Gary. For some of you guys get blocked. You put in currency pairs and you get blocked by YouTube. Oh, well, that euro pound. Well, look, yeah. Banda, here's something. If you're over leveraged, so you got $100 in your account and you got three mini lots going, and then there's pound related news. Yeah. If you have 80% of your account on a trade and hit volatility, okay, you're going to get closed out. No, but generally that stuff, no. That's the stuff of small time, very, 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 very small traders. Okay. They're cold of many colors. Yeah, I guess I better cut it short if I'm going to do FOMC, right? Okay, USD CAD, Euro Swissy, anything else? Pound Swissy, USD CAD. Well, I did a lot of US stuff. Let's do, I don't like Euro Swissy. Let's do Pound Swissy. I'm going to go with Pound Swissy, guys. I'll pull it up here. Yeah, I'm going to try to do that for you guys. Just meet me at the YouTube channel. Stream it if you got it. So I'll log in like before. And if you're a subscriber, remember, if you subscribe and I start a stream, you'll be notified. So if you want to attend my FOMC stream today, while the Fed releases their decision, please subscribe to the YouTube channel and you'll be notified. Okay. Euro Swissy, Pound Swissy. Let's do Pound Swissy. Okay. So I've already done this one. These are dailies, right? So we must have done it last week, but let's just do a quick review. Okay. I had this as support. I had this as resistance. And there's two strategies you can do. If you get an entry off of resistance, you trade it back down to support. Or if you get an entry off support, you trade it up to resistance. Okay. But ultimately, what you're actually waiting for is a breakout, which then creates a roll reversal. So now you should be long here. Monday morning, you are long at a roll reversal on a breakout strategy. Roll reversal, breakout pullback strategy at a weekly M2, targeting a weekly M4. Wait, those daily. These are dailies, I think. I've moved them. No, that's this week. So anyway, so Monday morning, you bought at a weekly M2 with the target of weekly M4, and you are now done for the week. That is straight up perfect. We'll never get any better than that. Okay. Look at this. Perfect swing entry, perfect swing exit, perfect swing entry, perfect swing exit. Okay. Most likely, we'll buy it here next week. Probably Monday morning. Look at this. Monday morning trade entry. 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 But you guys say it's too hard to get up. So for me, it's Sunday at 5 p.m. It's too difficult for you to be here. It's too difficult. It's too difficult. It's too difficult. It's too difficult. But for those that can find the strength to get out of bed, right? They get paid they get paid, they get paid, they get paid. And what happens to those get paid? If you get paid, you get taxed. Right? So how does it break down? 33% goes to the government, right? 33% gets saved. 33% goes where? Well, first of all, this always goes away. This is your retirement account. So this is one of the things we'll cover when I do my professional training. You're going to have to set up a business for yourself and set up a retirement account. And you're going to put money in and save it. Do you know why? You're like, Wayne, if I get filthy, stinking rich, why would I need to save a retirement account? Because if you don't put it in the retirement account, it goes in here. You give it to the American government so they can build schools in Baghdad and not Detroit. Okay? So you're like, well, I don't want that. Well, then give it to yourself. So you put it in a retirement account. It's pre-tax. It's like you never made the money. Now, guess what? Because you're the owner of the business, your business is so generous. It will match. So you might put something like $20,000 in your retirement account so that you don't give it to the government. And then because you're the owner, you're the CEO of the business, you're like, I'm going to treat my employees with respect, so I'm going to add another $20,000. So you get $40,000 free money that compounds in a retirement account for 30 years. Whatever. So anyways, you got to do things like that just to not pay the government, because they're going to screw it up, right? So anyways, we got to go, yo. I'll see you later today. I got to go meet with my coach. I got to get better. I got to get strong. Got to win. I need my A. I want an A. I get so upset when I get A minuses or even a B plus. B pluses are the worst. I cannot get a B plus. I cannot. So I'm hiring a coach. I'm going in strong. Right now, my grade is like 91% average over my homework and over my exams. 91%. Not good enough. I need a coach. If you are a subscriber to the YouTube channel, to the Forex.Today YouTube channel, you're welcome to attend my live coverage of the FOMC event today. So subscribe, 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 subscribe. Also, watch some of the other videos. Leave likes, leave comments. If I was a dick, go ahead and tell me. But remember, I also have